This is the most valuable company in the history of the world. Nearly $5 trillion. It grows 85% a year. It keeps 75 cents of every dollar as gross profit. And here's the part almost nobody expects. It might actually be cheap. And yet whisper the word bubble on Wall Street right now, and this is the company everyone is talking about. Meet Nvidia, the engine of the entire artificial intelligence boom. So the question is unlike any other stock we've covered. How can the most valuable, fastest-growing company on Earth also be one of the most feared? Is Nvidia a once-in-history money machine? Or the center of a bubble that's about to pop? The answer comes down to one number. Stick around, because part 3 is where most people get Nvidia completely wrong. Nvidia is a nearly $5 trillion company. We'll run this in 3 parts: why the business is unstoppable, where the real danger is hiding, and the chart. Then a verdict, and the one metric that settles it. Let's start with why the bulls are, frankly, in love, because the numbers are almost hard to believe. 1. The growth. Last quarter, Nvidia did $81.6 billion in revenue, up 85% from a year ago. And it guided to $91 billion for this quarter. A company this enormous should not be able to grow this fast. Nvidia does. 2. The profitability. Its gross margin is around 75%. For selling physical hardware, that is almost unheard of. It's the kind of margin you'd expect from software, not chips. That's the power of having a near monopoly on the one thing every AI company on Earth is desperate to buy. 3. And this is the twist that surprises everyone. Nvidia is not, by its own history, expensive. Because its profits have exploded, the stock trades at around 30 times earnings. That's below its 10-year average of over 50. Wall Street agrees. 61 analysts rate it a strong buy, with an average target implying around 50% upside. The most growth, the best margins, and a reasonable price tag. So where on earth is the bubble? Here's the key insight, and it's the whole video. The bubble isn't in Nvidia's price, it's in Nvidia's customers. Nvidia's revenue depends almost entirely on a handful of companies spending unimaginable sums to build AI data centers, and lately, the way they're paying for it has started to look, well, circular. Nvidia has been investing billions into the very companies that then turn around and buy its chips. It's reportedly involved in helping finance OpenAI's massive expansion. Add it all up, and there are hundreds of billions of dollars in deals where the chipmaker is helping fund its own demand. Even Wall Street veterans have compared it to the financing games that came right before the dot-com crash. Here's why that matters. If AI demand is real and durable, this is just a company accelerating an unstoppable trend. But if that demand is even partly a bubble, propped up by circular deals, then Nvidia isn't just a participant. It's the epicenter, and the fall would start here. Then there are the 2 other clouds. China, where export restrictions mean Nvidia is generating almost no revenue from what was once a massive market, while local rivals race to catch up, and competition, as its own biggest customers, Google, Amazon, and others, design their own chips to depend on Nvidia less. So here's the scorecard. On one side, 85% growth, 75% margins, a monopoly-like moat, and a reasonable multiple. On the other, a customer base propped up by circular financing, China effectively closed, and its biggest buyers trying to build their way out. An unstoppable machine, or the center of a bubble. For a tiebreaker, we go to the chart. Fundamentals tell you what. Technicals tell you when. And Nvidia's chart shows a champion catching its breath. After hitting an all-time high near $237, the stock has cooled to around $200, down roughly 15% from the top. Zoom out, though, and the long-term trend is still powerfully up. This is a pullback inside a monster uptrend, not a breakdown. Momentum has actually flipped bearish in the short term. The relative strength index has fallen to around 38, close to oversold territory. In other words, sellers have been in control lately, and the stock is getting stretched to the downside, the levels that matter. This pullback has pulled Nvidia toward key support in the $200 zone. Hold it, and the uptrend stays firmly intact. Lose it, and the next real floor sits lower, toward the levels it broke out from earlier this year. Overhead, the stock needs to reclaim strength and push back toward that $237 high to prove the champion is back. So the chart says, a long-term winner, taking a sharp but normal breather, sitting on support, and a little oversold. So, unstoppable machine or the center of the bubble? Here's the honest framework. The bull case is extraordinary, and it's not hype. Nvidia is the single most important company of the AI era, growing at a blistering pace, with software-like margins, at a price that isn't even demanding. If AI spending keeps compounding, this stock is still early. But the bear case is subtle, and that's what makes it dangerous. You are not really betting on Nvidia's execution, which is flawless. You are betting on whether its customers' spending is real and sustainable, or whether a chunk of it is a circular illusion. Nvidia can do everything right and still fall hard if the AI spending boom simply slows. Which brings us to the one metric that settles the entire debate: data center revenue growth. That's it. Nearly all of Nvidia's business is now data center chips for AI. So that single line is a live readout of the entire AI boom. Watch its growth rate every quarter. As long as it keeps climbing, the bulls are right and the boom is real. But the very first quarter data center growth clearly decelerates. That is the market's signal that the AI build-out is cooling. And for a stock that is the boom, that's the number that matters more than any other. Pair continued data center strength with a hold of that $200 support, and the champion thesis is intact. Until then, Nvidia is the ultimate high-quality stock sitting on top of the market's biggest question. Is the AI boom real or a bubble? A stock to understand completely before you ever touch it. That's the full breakdown, the growth, the margins, the circular risk, and the why behind all of it. If this helped Nvidia make sense, subscribe. Every week, we break down one company on Wall Street exactly like this, so you can invest with a framework instead of a feeling. The free breakdown sheet with all the numbers is linked in the description. Quick, but important. This channel is for education and analysis only. It is not financial advice, and I'm not your financial advisor. Do your own research or talk to a licensed professional before investing a single dollar. What company should we break down next? Drop the ticker in the comments. See you in the next one.